Welcome back. And today we're going to look at dividends and one company in particular. We'll start here at Dividend Radar. And if you're not following any of this, I will put a link on this video and also in the description. So head to Dividend Radar, download it. Once that's downloaded, we'll go back to Google Sheets. And here we'll run our macro called Chowder. All right, once that finishes, we now have a narrowed down list of companies that we can analyze. And looking at this week, there are no additions. And so for today, I'll just look at one company in particular, something that interests me, and talk you through a bit of my process. All right, and the company that I want to key in on is Universal Forest Products. And they've been paying a dividend for 10 years, some nice dividend growth over that time. The radar says it's in fair value. We will examine that ourselves as well. It's got a Chowder number of 23, and then some very nice earnings over the year, revenues increasing, margins up, cash flow per share, nice return on equity, current ratio, not a lot of debt at all, nice return on capital, low PE, pretty low price to book, and a decent PEG. And they're in building products. All right, so we'll head to our dashboard. This is a basic material, lumber and wood company. Been around public for 28 years. Earnings, $628 million. Revenue, $9.5 billion. Looking at a 1.3% dividend. Payout ratio of 8%. Pretty low. Very nice. PE of 7, forward of 8. PEG of 0.4. Yeah, this past year, they grew a lot. Next year, likely going to retract slightly. And then earnings over the next 5 years looking to excel. Nice return on equity, return on capital invested, and then very nice revenue growth over the past 3, 5, and 10 years. Moving on to our gurus. Graham says it's 68% discounted. We'll take a look at that. For this, we're using an earnings per share of 3.9. We're using a conservative PE of 7 as our static. Growth rate of 17%, which we got from our main page. Looking at a 1G or a 1 growth. Corporate bond of 4.4 and the AAA bond of 4.48. So we're looking at an intrinsic value of $244, says Graham. It's very interesting. DCF of $82. We're looking at a price right now of 78. CAPM of 16. Earnings yield 18. Return on capital 36. And acquires multiple of 5. That's very low. Very good. Again, we want the lower the better there. And they have a enterprise value of $4.9 billion. With operating earnings of right around $1 billion. A very well-run company. And if we're expecting mean reversion to occur, like Tobias Carlyle would say, then we would expect this price to catch back up with those earnings. Okay, they got a Petrosky of 8. Take a look at that too. Return on assets is positive. So we get a 1 there. Net income positive. It's a 1. Cash flow positive, and the cash flow is greater than net income. So we get 1s there. Very nice. Current ratio better from this year to last year. So we get a 1. Long-term debt is shrinking from last year. So we get a 1 there. Very nice. Outstanding shares, no change. We get a 1. And then gross margin better this year than last year. And we lose 1 point on asset turnover by 0.1. Pretty low Sharpe ratio, so not a lot of risk. Hilltown's 10 cap at a 17%. Take a look at that one too. Cash flow from operations, CapEx, maintenance CapEx, market cap. That gives us a cap rate of about 17, and we want to get at least 10. And again, this is all about opportunity cost, because we can probably find 10% in a number of places. And if we can do better than that, then that's good for us. Okay, earnings yield, ROIC, all good. Pretty low EV to operating cash flow, EV to sales. All right, looks interesting. So we can drill further into this. Here I would take a look at the website. We're looking predominantly at industrial products. All right, so you got trusses there. They're all over the place, 211 facilities, packaging, and they just joined the Fortune 500 there in June. So that's very nice. Always interested to see the company, if they're hiring. This doesn't obviously tell us everything, but it is just good to take a look at and see how many positions are open in total and what they're hiring for. So you got 470 open positions. In addition, I take a look at the company's governance, but really their board of directors. And it looks like the chairman has been around for a very long time, since 1971 at the same company. And he was inside sales and worked his way up, it looks like. So that's a very good sign. Okay, next, I would just take a look at Open Insider. You got the chief operating officer, the CEO, CFO, selling a bunch of shares when it ran up in the 90s, 80s, and a bit in the 70s. But we're at 78 today. So I'd be selling too if I was those folks, with wood being where it was over the past year. We'll take a look at whale wisdom, looking at a pretty even calls to puts ratio. That's good to see. If you don't have everyone in one direction, there's a bit of uncertainty there, and that's good for the average investor like us. So then take a look at the date reported for September 6th on down, selling a few shares, adding a bunch of shares here from Summit, Legal in General, Goldman Sachs selling a bunch, 17 million. Okay, once I'm done my own research, I would then begin to take a look at other people's opinions. But other people's opinions should be the least weight in your decision. And often you're going to want to go in the opposite direction of what they say. So next, we'll just take a look at Seeking Alpha and get an idea of what analysts are saying. Yeah, most of this is bullish news and sentiment, which makes sense based on their fundamentals. I would also take a look at TempRanks, see what they're saying. I got 3 analysts saying buy with a 33% upside. And next we take a look at the technicals. On the top you have the weekly chart, on the bottom you have the daily, and this is trading view. And so a pretty big run up past few years, with all very nice earnings. This kind of looks like it's still in a stage 2 advance. This could be flattening out here. This could be another base for another move up. It's got a relative strength of 84, so that's pretty good. It is right below the 30-week moving average, so I would not buy anything until it moved back above that. And on the daily chart, broke out of this box here, moved along, broke down out of this box, and we're back down here now. So again, this would have to move back up to the 30-day moving average and then maybe get interested. Other interesting point here is the Mansfield Strength Index. So this is pushing down. And so I'd want to see this start to turn up before considering making a buy. You can also see that reflecting in the MACD as well down there. So we want to see those flip and turn upwards before making a decision to buy. All right, that's all I have for today. Hope this is helpful, and we'll see you soon. Bye.